and welcome to this panel on channeling the evolution of carbon markets in India. And I'm joined today by three great panelists. Vishwajit, Dahanukar, founder and director of Envex Technologies, ACX India. Indranil Chatterjee, SVP of ICX. And Anuja Tiwari, senior partner at AZB. Now, India has an insatiable appetite for all energy, and especially fossil fuels. The minister has said during this week, Mr. Puri, how much EMP is important, gas is important, and with that comes the flip side of carbon and how we manage that carbon. And I think India is very well placed to be a leader in the carbon market space and to really manage that how they handle carbon. And I'd like to start with Indranil, if I may, given your background, to give us a little bit of an overview of where India is in terms of its journey. Obviously, we start with one position, ambition, and then we have the other side, which is reality. And around the world, everyone is trying to move to this reality. Where is India in this journey? And can you give some thoughts about how that's going?
Perfect. Thanks. Thank you so much, Paul. And I think post-lunch sessions are always a little bit of challenge. There is a direct correlation between afternoon siesta and the session. Nevertheless, so the topic that we intend to speak on today is about the convergence of the carbon markets, and in I think all of us have the same understanding that India is going to play a very big role in this shaping up the carbon market for the future. So we have been historically been a supply sink for the global voluntary carbon market, and alongside that, now there has been a discussion of developing our own ecosystem of carbon market, which is formally known as CCTS, Carbon Credit Trading Scheme, and which is being spearheaded by Bureau of Energy Efficiency under the aegis of Ministry of Power. And so, again, looking at where we have been and what kind of an understanding we have developed for the market over the time. So, for a country of our shape and our size and our dimension and our kind of energy intensity, we see that there has been remarkable steps that are being taken in terms of creating a carbon market. So those of you who are obviously following the market movement, so it all started with the amendment of Energy Conservation Act, EC Act, wherein the enabling provision for creating a carbon market was introduced. That followed by identification of agencies, wherein BEE was identified as the nodal agency for spearheading the carbon market, and BEE has been bringing on regulations, guidelines on the carbon market for quite some time. They first came with the draft carbon credit trading scheme, then some days later they come out with the final CCTS scheme, and in the final CCTS scheme we also observed that along with the compliance market there would be a component of offset market as well. So the compliance entities, they will be given a chance to offset a percentage of their carbon requirement from the offset market, likewise other major markets in the world. So BEE came out with the draft CCTAs, then final CCTAs, then CERC recently came out with the draft trading regulations for sale and purchase of carbon credit on the power exchanges. Then we also see very good progress in the offset market side, where we have observed that BEE, again, they published the list of sectors. I think in October they came out with the regulation. They identified 10 sectors which will be taken through the BEE approved offset market. Then now I think in this month only, January, they came out with 12 methodologies, which are again draft methodologies. They came out for public opinion on those methodologies. So once these methodologies are being approved, then our understanding is we'll be in a position to launch an offset market, which is the first stepping stone of the carbon market in India very soon, maybe Q1 of the next financial year itself. Looking at the offset market and the speed at which things are moving, my expectation is sometimes by the end of this year, within definitely by the end of this year, we'll also have the compliance market in place. So India per se would be ready with its own carbon market, be it compliance market and as well as the offset market by end of this year. And once the market comes in, maybe within 6 months to 1 year's time, we'll start seeing the certificates, the carbon trade certificates, the tradable commodities floating into the market. So maybe early, so next year by this time, we'll also see carbon credits, the Indian domestic carbon credits being traded through the marketplace. So that is the expectation from the market now.
Thank you. It's interesting because, when we talk about a market, we talk about commodities. And Anuja, me and you were talking a little bit earlier about this concept about how does carbon become a commodity. And I'd like you to get your perspective on how that journey can be realized.
Thank you, Paul. I agree with Indranil that we are off to a great start as far as the creation of marketplace is concerned. But the question, which is inherently difficult to answer, is that what is the very nature of a carbon instrument which we're talking about, whether it is for the purposes of compliance or it is for offset. The question is that if you really want to trade in that, or you really want to push the agenda that where it is insulated by any political movements across the globe or any other kind of sort of extraneous circumstance, you will have to stop treating as essentially a derivative or a security, maybe give it some shape or form of security where it can be used for that purpose, but inherently it has to become a commodity. At the end of the day, if you recall, under the Kyoto Protocol regime earlier in India, the carbon credits were actually traded on MCX, which is a marketplace for goods. And the Supreme Court has come out with its judgment saying that between services and goods, it is actually goods, maybe for taxation purposes and other things. But honestly, till the time you don't treat it as a commodity which has a value in itself, which is going to be driven by the demand and supply in the voluntary market, before the regulation actually starts pushing it into the marketplace, unless you give it that proper characteristic of a good, it is very, very difficult to push the agenda to make the marketplace actually, flourish and serve its purpose for which, we have started the process and we are going to be perhaps in the next year create those marketplaces. So I think that's extremely important.
Thanks. And Vishwajit, if I can bring you in now, in terms of when we look about a functioning market, and Anuja's, made a good point about supply and demand is the hallmarks of a market, and then which follows with that as well is price discovery. And can you give your thoughts on how we achieve those kind of that goal?
Yeah, so I think one of the things that we have to bear in mind is the fact that this is an asset which has a demand which is created out of voluntary action. So it's naturally being driven by the fact that there are corporates who want to do good to clean up the environment. So being voluntary in nature, the inherent demand for this commodity is really up to voluntary action. So on the other hand, we've got regulated markets like you've got the ETS, EU ETS, or some markets in the US, which are regulated by legislation mandating corporates to bring down their emissions. Now, if you look at that market, that is purely driven by regulation. And here the challenge is for the regulator is how do you price this particular commodity? Because if you price it too low, then you don't have enough incentive for the projects to come up. If you price it too high, then there is a pushback from corporates who require to meet mitigation targets, and so the regulator is again under pressure to change legislation. So the question of price discovery is a very complex thing to answer in this particular market. But what we are finding is that we run exchanges worldwide, and because of our experience in Brazil, Indonesia, Thailand, etc., what we find is that unless we've got a global connectivity for this particular asset, particularly on the voluntary side, it becomes extremely difficult to get true price discovery. And this is something which we've been kind of struggling with and trying to push at our end. Also, we have an example of Indonesia which did not allow the export of credits for the longest time, but now they've opened up the market to international buyers and also secondary markets. And so what we are finding is that the project owners in Indonesia are able to get better price discovery for their projects. But like Anuja just mentioned, I think the point is that this has to be looked at as a means of financing the net zero transition. It cannot be looked at as purely an offset for a regulatory requirement. And only when you treat it as a commodity and you're able to then securitize the cash flow around it, where large amounts of capital flow to the market based on carbon revenues. And there are several projects where you can make them viable purely on the price of carbon. So in order for those projects to see the light of day, they need to have the ability to be able to fund the projects over the life cycle of the project, not just a one-off spot market trade.
And on that note, if I can follow up with you just quickly on that, on you raised there, how do we scale up these? How do we scale up? What how do we get there in that regard?
So there's two aspects of it. The first aspect, which I believe, is that we need standardization. Today we have so many standards across the globe that it is kind of a very personal choice as to what type of credits you would like to buy. So if you have standardization, the standardization then creates liquidity, and the liquidity then creates a depth of the market and obviously the credibility that comes from it. And unless that happens, you don't have large amounts of capital chasing that particular commodity. So that's one aspect of it. The other aspect of it is the issue of the quality of the credits. And this is a debate that has been ongoing across the globe with every stakeholder that's involved. So on all our exchanges, all the credits that we trade are rated. So not only are they issued by a registry which are already done the groundwork for ensuring the quality of the asset, but on top of that, they're all rated by one of the rating agencies, which gives it a better marketability and often enough a better price. But really, that's the best we can do at the moment.
Indranil, if I can bring you in now, and talk a bit more about India's experience in this regard, in trading environmental products, RECs, ES certs, things like that. Can you share how that's progressing?
Yeah, definitely. India is not a newbie into the environmental commodities market. So we have been having our own domestic REC scheme since 2010. We have our ESerts or PAT scheme, which is the predecessor of the carbon credit scheme, since 2012. And both of the schemes, so I would say from a scheme perspective or from a methodology perspective, from implementation perspective, they have been terrific. Looking at again at the scale and size of our country, length and breadth of this kind of a country, covering all the energy intensive sectors, covering all the obligated entities, creating enabling regulation framework, it has been a long journey for us in these two environmental commodity space. REC so when REC was launched first in 2010, so if you guys have been working there, you'd remember the floor price was provided, I think, around 18 or 21 rupees, something like that. So each unit of REC, each seller who sold REC was guaranteed to get 18, 20 rupees in additional to his electricity cost. So that kind of support that was being provided to REC to start off. Gradually, as the market started maturing, as we more and more achieve the grid parity, as renewable becomes sustainable by itself, the floor price on the RECs gradually started reducing, and I think in 2022 or 2023, last floor price was 1,000 rupees, and ultimately it got removed. Now, the moment it got removed, the prices started falling like anything. So the prices from 1,000, I think within 6-7 months, the prices at our exchange fell down to 100 rupees for one REC. Now again, there is some pull in the REC market, the prices have again increased. Similarly, if I look into the history of the ESert, again, from a product perspective, from a methodology perspective, from an implementation perspective, it has been a fabulous product. covering more than 65% of energy intensive industries, running 7 cycles of PAT, covering cement, chloralkali, iron, steel, power, discom, everyone under the ESET scheme, making them obliged to the compliance. These are all mammoth and Herculean tasks. But the problem that comes in is when we talk about creating a product, creating a commodity, creating a market. There has so all these markets have been oversupplied market. Now, oversupplied market comes from two reasons. Either there has been lack of demand in the market. Normally, these are compliance markets. So, in the compliance market, there should not be a lack of demand. So, the compliance is not strong enough or effective enough, number one. Number two, if I look into the supply side efficiency, maybe how do you get such huge amount of credit flowing into the market so that your credit price falls at 100 rupees? So that's methodology setting, issuance process, and all these things. Maybe the digital MRV or not digital, the MRV mechanism. All these things needs to be looked after. And now why I'm saying these things because we're in the cusp of creating our own carbon market, and these are all the learnings that we have observed over time. So from a plus side, our methodologies are in place, our industries are ready. They have been dealing with RPO and ESET, so they understand that environmental obligation is a big obligation. So they are ready, they are willing to embrace it. But on the other side, compliance, effectiveness, and at the end of the day, creating a free and fair market for any commodity. I think these are the steps that we need to look for going ahead. So far, as for our experience.
Anuja, as well, I'd like to take that point on from Indranil as well. Is that in many ways, most commodity markets work in the sense that if prices collapse, investment drops. The old adage in market terms. What's the cure for high prices? High prices. I guess for carbon, it's slightly different, and I would like to talk a bit about that and a bit about how incentives can work to make the carbon market work more effectively.
Thank you, Paul, for asking that question because, as a transactional lawyer and being true to my grain, let me say this. We have to understand what this instrument is all about. We are actually talking about something which cuts across socio-economic and climate needs, right? So this is not akin to, if I may just, for the sake of giving an example, call it it's not a share certificate, right? We are talking about an instrument which originated out of Kyoto Protocol under Article 12, essentially for two reasons. One, that you were using a technology which is good for the environment and which is far more expensive. So we were talking about additionality in that sense, whether it was environmental additionality or it was, financial additionality, and that really was the hallmark of registry under UNFCCC. That's where we started off from. Unfortunately, what is happening right now is that everybody is looking at how much out of this commodity can I actually get the highest price. But what we don't understand is that the intangible nature of this commodity and the underlying or sort of the project out of which it emanates is equally important. So until and unless you involve and to your point of scalability as well, till the time you don't involve local communities, you don't really make the climate impact. The whole idea of having a carbon instrument or tradable instrument, the emphasis will always be on an instrument which is tradable rather than actually being true to what it needs to serve as a purpose. The carbon is still hanging in the air. Let's just get rid of that first. So we need to do more socio-economic projects. We need to change our lens a little bit. I'm not saying that don't make money out of it. Of course, please do make money out of it. But the reality is that it needs to have some added aspect to it. It serves some other purpose as well. And that purpose we should not lose sight of. And it's extremely important. And I urge everybody to please start changing your thinking about it. Treat it as a commodity which has a value of its own. Start getting these carbon credits out of projects which actually help the climate initiative. Don't duplicate, retire them for the benefit of the climate. Make the entire ecosystem and the change such that there is fairness and transparency and accountability to this entire system, which will eventually lead to the success of the marketplace where they're traded on.
Yeah, because it is that issue, isn't it? Like the challenge is if you pollute or your construction work or whatever you're building and you create these, those carbon is a cost to you as a business. It's a problem. You don't really want to be paying extra for that cost, but at the same time, an effective market allows there's the incentive as well. You can benefit from that, isn't it? So
That's correct. And in fact, if I were to talk from a regulatory perspective, as Indranil has rightly pointed out, there is really no shortcoming in the regulatory process, right? It is good enough to regulate the marketplace, but at the same time, it is not interfering in that sense. It is an enabler, to my mind, and we have done great. It's not, and for decades we have been regulating, sort of coming out with those regulations and incentives that are required to push this market. But ultimately, it boils down to people who are producing these carbon credits or are becoming eligible for these carbon credits, and to those who are buying these carbon credits, whether for secondary sales or for their own use. The question is about structuring it. The question is about changing your lens to look at it as just a pure commercial commodity to be traded in, or to add other aspects to it, which is what regulation is asking you to do, and then come out with innovative structures where you possibly can get maximum value to be derived out of it, which necessarily not be only monetary in nature.
and Vishwajit, I'd like to bring you on the point that you mentioned it a little bit earlier, and it has been touched upon. It's the sense that the Indian market doesn't just happen in isolation. It's part of a global setup. There are various carbon markets at different stages around the globe, and you've had a lot of experience in some of these. Can you bring your thoughts about how we integrate India's market and carbon markets, and generally carbon markets in general, and the sort of challenges there?
Well, if you look at the current voluntary carbon market, I think most people will realize that India is on the supply side. So we're already integrated into the international carbon markets in that sense. Now, what's changing is two legislations which are upon us, CBAM as well as CORSIA. CBAM is an EU ETS kind of requirement for anybody who would like to supply product into the EU, and it's upon us next year. So whether we like it or not, we have to comply with CBAM if goods are to be shipped to the EU. The other one is CORSIA, which covers the airline industry, and the EU has taken the lead on that by mandating the fact that all flights in and out of the EU will be carbon neutral. And of course, one of the things is the sustainable aviation fuel industry, which is a small part of that particular compliance requirement. But that will mandate all airlines, including Indian aircraft carriers, to make sure that they comply with CORSIA. So these legislations are already upon us. So I think it's very important that we develop a market which factors into and takes into consideration all these international regulations and laws that are being put in place. And so I think the challenge to the regulator is to formulate a market which takes into account all of these regulations which are emerging. And I think that continues to be the single most sort of challenging aspect of creating a globally integrated market. What we're also finding is that Singapore is now creating a market by which you will be able to buy CBAM credits in Singapore for even Indian and Chinese companies who are the big suppliers to some of these commodities that the EU buys. So all of this is happening, and I think as legislation and regulation keeps getting written up, I think more clarity will emerge over the next year or two.
And I wanted to just follow up with you on another point. I know that ASEC is very involved in this, is the use of technology to leverage this as well. I mean, it's very important, and we've had many discussions this week about AI, digitalization, and blockchain. Can you give your thoughts on how technology can improve the effectiveness of carbon markets?
Yeah, so all our exchange infrastructure is based on a blockchain. So we have full traceability, and we have a T0 transaction clearance time. So there is no delay or lag on any of the exchanges across the globe. So you could trade carbon, between cross-border carbon trades. They would happen at T0 with full traceability. Besides that, I mean, all of them, like I said, all the credits are rated. So you have full traceability right from the project right up to retirement. So there are no issues in terms of any questions about double counting or anything like that on any of our exchanges. Um, there are certain AI applications which are now being built for climate change, and most of them are around the forestry and other applications, which are the big suppliers of these credits. And so we are seeing a lot of technical innovation in this space. So the integration of AI and blockchain into climate is really where the forefront of the technological innovation in this industry is lying at the moment.
Thank you. Indranil, if I get back to the fundamentals as well here of creating sort of healthy supply and demand in the market, can you share some thoughts about what you're seeing there?
Again, so traditionally, if we look into India, India has been a seller's market. So we have been having all the renewable projects, we have ample forest lands, we have large rural areas to supply cook stoves, and all these have been yielding carbon credits, and India has been selling those carbon credits to the international market. Now, with this new market coming in, the the country's own market coming in, see, there's a fundamental question of how the demand is to be raised, because demand. See, if you want to create any marketplace, you need to have a very liquid market. So there has to be ample supply, ample demand, supply demand balances. There will be transparent price discovery. That is how the market, every market operates across the world. Now, when we look into the demand space in India, especially in a non-compliant sector, compliance sector, you have compliance entities, they will be mandated to buy. But non-compliant sector, then we'll have to see that who are these sectors who should participate in this market. Now, in my understanding, there will be some commercial building people like the structure where we are. They would like to have a green kind of a building, green certification building. There would be people who would come under CBAM. The export-oriented units will be supplying outsides, and then some very, I would say, very high level, high net worth kind of companies, which wants to really portray a very clean and green kind of an image in the market. So they will ideally form the buyer base of the carbon credits. But looking at the supply volume that we are going to yield, will this buyer base be enough? We need more buyer base, more demand in the market. Otherwise, market would expect a price fall. So this demand structure has to be created, and one way of creating this demand structure is, again, if I take a cue from Vishwajit, is to open the international markets. So we let the international participants also take part in our market. Now, if you want the international participants to take part in our market, then you'll have to think of two, three more things. Will you allow a dollar trade? Do you have a system to allow dollar trade within India, or you need to set up a structure in the gift city to allow it to happen? So all these complexities are there associated with the product. And again, we are thinking maybe a little step ahead, but from a starting perspective, we are launching a market. We'll see how the market would behave. We will see how the demand would come, and if need be, then we might be going international. We might be moving ahead. But if we open our carbon credits to the globe, then that also exposes us to additional scrutiny regarding the methodologies that I am following to issue my carbon credits. So my government approved methodologies will have to be approved by the European government, so that European entities will come and buy my carbon credits. My process of MRV, measurement and verification of the credits, whether it's digital or non-digital, will have to be approved by the buyers. So we get exposed to all these complexities, and my understanding is gradually, if we again want to have a very good happening liquid kind of a market, we need to do all this stuff, but one step at a time. We'll start off with the local market, and then gradually we'll move ahead.
Yeah, it's a really good point, Indranil, because my traditional background is oil and gas, and oil has obviously been is a very functioning liquid market, has been very established for many years. But gas, on the other hand, is actually was for up until very recently was a very localized market. We're very regionalized. European gas market, India, the US, and even now the US is still a very localized. Henry Hub is a very localized gas market, and it's only been in the last few years that sort of with the sort of rise of LNG that we've started to see a much more liquid gas market. And when you think that gas is how long established gas is, and how how far it is down the journey compared to carbon, and carbon's so catching up so quickly, it's incredible how the commodity market can change. Anuja, if I can bring you in as well, and pick up a point of what Indranil mentioned, which comes back to fungibility really. Like, how can the different certifications, credits, RECs, all the different, how can we create a market that sort of can use these interchangeably?
I think the key is in standardization. The more you will move towards standardization, the easier and simpler the nature of commodity and its definition will become. Today, if you ask about me, for most commodity and just not carbon credits, actually, just to sort of go a little segue is say green hydrogen. Today, the definition of green itself is problematic. Not about hydrogen. Everybody knows the nature of hydrogen. Everybody understands what it is. But the trouble is in defining green. And this, I think, and people are, Indian government has come out with, and kudos to them about this, green taxonomy for green steel. Similarly, we will need this kind of definition and standardizations for every commodity. And then the question is, once the standardization is achieved, I can assure you that the regulation is so robust, and at the same time it gives you the flexibility to explore certain traditional models like virtual PPAs, and then create structures out of it which can actually help you monetize it to the maximum and extract the value. And you don't have to stick to the traditional virtual PPA model where it's all dependent on the strike price, but you can actually have different variations of it whereby the underlying objective of climate change and ESG etc is also met, but at the same time you do get the monetary value. But this is only possible, and as Indranil was rightly pointing out, that if we expose ourselves to the international markets, first thing we'll have to do is standardization, because the scrutiny that we are going to receive back as a consequence of opening ourselves to the international market should not be a price that we pay or a negative for us to go outside of our own jurisdiction, but should be an incentive for us to go outside, and that can only be done, and the key is only in standardization, which is what I sort of urge the governments to think about and come out with a methodology where this is there. And I think this is what the Baku extract and chapter was all about, that ultimately we have to get to an idea and state where we are not independent but interdependent, and at the same time we achieve what it is. So a carbon credit generated in Ghana is useful in Switzerland. If you want to really make it, then you need to make sure that there is development happening in Ghana which is valuable enough or up to a standard which Switzerland will accept. So then and that takes away the entire equation of developing country or an underdeveloped country interacting with a developed nation, and that should be the ethos of climate change policies.
Yeah, and I think it has been happening, isn't it? Like, you go to Zambia, their forest is being offset, the carbon. It's starting to work as a global market. And on that regard, we're on the cusp here. Like, when a lot of the things talks this week about very established industries, very things that are already in place. We're here right now with carbon markets in terms of we're early in the journey-ish, and it's a map. It's a canvas we're writing at the moment. How do you see that journey evolving? In the next six months to a year, especially for India, how do you see that? How do you see that evolving?
So from a market perspective, I think a couple of clarities are extremely crucial. So firstly, since we'll be having our own carbon market and we are a very large country, we have our own NDC commitments in place. So how much would we be allowing credits to be exported out of India? So that is one clarity that is very, very crucial for the market, because that is, in my understanding, holding a lot of investments. Traditionally, prior 2020, when we did not have our own NDCs to adhere to, so we had every credits, we have been selling everything in the market. But with NDC in place, our own carbon budget in place, how much would we be allowing to move ahead? So this is one clarity that the market is expecting. Second, again, so from a developer perspective, if I see, market is slightly perplexed. The reason is, one side we have the voluntary carbon market, one side we have the compliance carbon market coming in. In the voluntary carbon market also, I have a 2-3 prominent standards. I'll also have Indian carbon market standards pitching in. So now, I being a developer, my intent is to get maximum value out of my product. So that is my intent. I'm sorry, I'm deviating from your premise of the social clause, but That is the developer mindset that I have observed, that I need to maximize on the investments that I make. And side by side, I also do want to do good for the society. Now, being a developer, I need to have a very clear guidance that I don't need to run with my credit from A to B to C to D. There has to be one place wherein I can log in and create my credits, and then from that, there has to be an interoperability between the registries or between the markets. And then, if it is not sold on Vishwajit's market, it will be sold in Expansive's market. So, that interoperability between the platforms is very much necessary. So, these are the two things I think will have to be very clear as a country going ahead. And in my understanding, within next 6 months to 1 year, maybe 2 year max, we'll have all these landscapes falling into place regarding what are the credits they will be allowed to export, what are the credits they will be holding back, what are the benefit, how if a developer wants to list his credits in Vera or Gold or GCC, how he can do that, where which exchange he wants to trade. So maybe it will take some time, but we see those things happening very soon. Another just allied point on this, which I have been thinking quite often, that carbon, the way this market has developed, it has been a heterogeneous product. It's not a homogeneous product. Unlike electricity, where you only have your KWS trading on the exchange, or in the gas, you have only MMBTUs trading on the exchange. Carbon is never like that. Somebody sitting in Switzerland would want a carbon from a project in Madhya Pradesh, in India, coming out of a cook stove project of the vintage 2017 to 2019. Now, when you become so picky, so particular, meticulous about your requirements, that by nature fragments the product and the market. And that's very important for exchanges, because exchanges thrive on liquidity. The more you break the product, the more you create diversification in a commodity, the less liquid market you have. So another expectation from the regulators, from the government is, since you are creating a tradable product, it is very, very important to bring every product, maybe through a multiplying factor, maybe through methodological changes, to the same platform, so that at least there will be liquidity from a sell side and buy side perspective.
No, thank you.
I'd like to just add to
Yes,
what
please.
Indranil said. He summed it up very well. So if you equate it to an oil market, everybody knows that oil from different oil wells is different, right? I mean, you don't get the same product. However, you still have a standardized product which gets traded. And I think if we look at carbon from that lens and try and make legislation which is tailor-made to ensure that we get a standardization, that's when the volumes will really pick up, and that's what our hope is from a regulator's point of view.
Yes, great point. And I think I seem to always bring back to oil and gas for some reason, but I guess, well, not for some reason. It's clear reasons of they're perfect models to follow. And I think also in terms of, from my experience in oil and gas, is that when I speak to people in the oil industry, they often say to me, we need a carbon market. It's actually, people think we don't want one, but actually we do. If we have the price of carbon, it's therefore we're not going to be demonized in the same way, because we're paying the price. We pay, therefore we're not getting away with it anymore. And in a sense, there's a lot to be said about that. And I know I'm conscious of time, so I would like to just get round the panel and just get some final closing remarks. And if I can start with you, Anuja, to sort of round up sort of some of the key things we may not have touched upon, or something you'd like to add to sum up today's.
Paul, my hope and expectation is that we are looking in the future at a very sophisticated market. Certainly, it has the capability to become an extremely sophisticated market. And I think the good thing about carbon market is that the problems are not as huge that they are not surmountable, or they're not solvable. They are fairly solvable. We just need to get our act together. We just need to be on the same page. More importantly, to be on the same page. And one thing that I say quite often, and as an energy lawyer, I've been noticing it for quite some time, we are in an era of energy adaptation, not really just pure energy transition, because that will be just, sort of closing your eyes to reality. And what you rightly mentioned, there are industries who are saying that we do need carbon market. And frankly speaking, the technology that is coming around, say carbon capture projects that are coming around, etc., they are also solving a certain problem of the, certain part of the huge problem that we are looking at. So there's not one solution to this entire problem. There are many, but I think this entire market, this particular instrument, if defined properly, if the contours of it are clear, if the buckets of it are very clear, there are standardization, there is more cooperation internationally, I see a very, very sophisticated market which is actually going to be genuine, will be, sort of rid of the problems of double counting and, not fairness and transparency. And it has a huge potential of actually unlocking the liquidity, the cash liquidity and economic growth that is required in every part of the world, which has been overlooked so far.
That's a great point. But I would just caveat one thing, that you just say just getting on the same page, but a camel is a horse made by a committee. So getting on the same page could be still quite a difficult thing to do. Indranil, if you can give your a final closing remark.
My closing remark in this would be more focused towards, as I think Anuja was saying, so we have a huge opportunity in front of us, and this opportunity not only serves the interest of the country but the interest of the developing nations as well. We'll have to be very mindful. How do we move ahead with this opportunity space? We have a huge gap in terms of training and development, the mass awareness, people awareness. All these things needs to be done very rapidly on one side, so that there is a general awareness amongst the normal people on this particular sophisticated market, which is about to grow manifold in growing years. Number two is, there is, at the ground level, we still see a lot of confusion. The again, coming to the developers in India, they are confused with REC, carbon market, voluntary carbon market, IREX, green credit program, which has been launched by Ministry of Environment. So there is a lot of things that is there in the market, and people genuinely don't know which side to move on and which will give them maximum incentives. So those clarities are needed. But again, given said all that, we are at a very nascent steps. We are in the right direction. We have huge opportunity. We need to only do good things to make that opportunity work for us. Thanks.
Excellent. And the final remarks from you, Vishwajit, please.
So, how I'd like to summarize this is that, we all are aware that climate change is the biggest challenge that we're facing at the moment. In order for us to deal with this challenge and to transition to a net zero kind of world, we are going to need large amounts of money. And I think that the carbon markets, with the liquidity and standardization that Indranil and has pointed out and Anuja mentioned, is one of the means, and the most efficient means, in my view, to channel this large amount of capital into climate change. And we should use those markets such that those flows of capital are channeled correctly. They should be utilized properly. They should be channeled correctly, so that eventually this transition to net zero can be achieved.
No, so it's a great point to finish. And I certainly just want to just add a couple of my own remarks before we close up. And just to sum up what we're saying is that it's because coming into the carbon markets, if for certain people, maybe in this room as well, like you've touched upon it. It is confusing. There's lots going on. There's a lot of mixture going on. But in many ways, it can be boiled down. It can be simplified into a clear, simple market. It's just there's a lot of moving parts, and we need to get to that same page, and we are doing that. But and like you said, I think it's very important that we need to bring that back to the net zero issue. The quicker we need to get the carbon markets in place, better for all of us. And I'd just like to say, just thank to all my panel today. Thank you.
Thank you.
Thank you.